Alright, so get this. The tech sector is about to see some massive shakeups, and if you're not paying attention, you could miss out on huge opportunities. Most people are watching the same old big names, but the real explosive growth is coming from companies fundamentally changing our digital world. We're talking about foundational technologies that will power the next decade of innovation. Today we're diving into two companies I believe are undervalued and poised for a breakout by 2026. One is a leader in real-time 3D innovation, powering the metaverse and digital twins. The other is a titan in advanced semiconductor technology, dominating gaming, data centers, and AI. These aren't just incremental players, they're market disruptors with a clear path to dominance. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Let's kick things off with Unity Software, ticker symbol U. This company is a name you've probably seen flash across your screen if you've played almost any mobile or indie game in the last decade. If you're a gamer, you've seen their logo before your favorite game starts. But Unity is much more than a gaming engine. It's a creative powerhouse that's quietly shaping the digital world behind the scenes. They're a real-time 3D development platform, providing the tools for creators to build interactive 2D, 3D, VR, and AR experiences. Whether it's a blockbuster game, a virtual reality training simulation, or an augmented reality shopping app, Unity is the engine that makes it possible. Unity is the backbone behind over 70% of the top 1,000 mobile games, a staggering level of market dominance. That's not just impressive, it's almost unrivaled in the world of software platforms. Developers stick with Unity because switching to a competitor like Unreal Engine means retraining teams and rebuilding workflows. The learning curve and cost of switching are high, which gives Unity a sticky, loyal user base. But gaming is just the start. Unity's technology is so flexible and powerful that it's being adopted far beyond entertainment. Unity's real long-term growth is in digital twins, virtual replicas of physical objects or systems. These digital twins are revolutionizing how industries design, test, and manage everything from cars to factories. Car manufacturers like Mercedes-Benz use Unity to design and test cars virtually, saving millions in prototyping costs. They can simulate real-world conditions, tweak designs instantly, and collaborate globally, all in a digital environment. In architecture and construction, Unity enables immersive 3D models for better visualization and fewer mistakes. Architects can walk clients through virtual buildings before a single brick is laid, reducing errors and improving client satisfaction. Unity is embedding itself into the workflows of massive industries, opening up new revenue streams that could dwarf gaming over the next decade. The potential for growth in sectors like automotive, manufacturing, and healthcare is enormous. Now about the stock, Unity has had a rough couple of years, especially after controversial pricing changes and management missteps. The company's share price has taken a beating, and investor confidence has been shaken. The runtime fee based on game installs sparked a developer revolt and sent the stock tumbling. Developers were furious, and the backlash was swift and loud. But here's the opportunity. The market has overcorrected. The sell-off has pushed Unity's valuation down to levels that may not reflect its true long-term potential. Unity has walked back the most controversial changes and brought in new leadership. The company is listening to its community and making the necessary adjustments to regain trust. The core technology and market position remain strong. Unity's engine is still the go-to choice for millions of developers worldwide. This is a classic case of short-term sentiment overshadowing long-term fundamentals. The market is focused on recent stumbles, not the company's underlying strengths. The market is pricing Unity as if its growth is permanently impaired, but adoption rates of real-time 3D outside gaming tell a different story. Industries are just beginning to tap into the power of real-time 3D, and Unity is leading the charge. Unity is shifting to a more predictable, subscription-based revenue model with Unity Pro and Enterprise tiers. This transition is designed to smooth out the company's revenue and make it less dependent on the volatile gaming market. This means stable, recurring revenue, something Wall Street loves. Predictable cash flow makes it easier for investors to value the business and for Unity to plan for the future. As more enterprise clients sign on in automotive, aerospace, and manufacturing, revenue visibility improves and so does the stock's potential. These industries are massive, and Unity is just scratching the surface. The metaverse hype may have faded, but the foundational work continues, and Unity is at the center. The infrastructure for virtual worlds, digital collaboration, and immersive experiences is still being built, and Unity is a key architect. Companies are still building virtual storefronts, training simulations, and collaborative workspaces with Unity's toolkit. These applications are becoming more common as businesses look for new ways to engage customers and train employees. As this trend matures, Unity stands to benefit as the infrastructure provider for the next internet iteration. The company's technology is becoming the backbone of digital transformation across industries. Unity is a dominant player in gaming, but its expansion into industrial applications is the real growth engine. The company is positioning itself as the go-to platform for any business that needs real-time 3D visualization. The stock is beaten down due to fixable mistakes, creating an attractive entry point for long-term investors. If Unity can execute on its vision, today's prices could look like a bargain in hindsight. The risk is real, but so is the potential reward. Investing in Unity now is a bet on management's ability to learn from past errors and capitalize on new opportunities. As Unity's new management executes and industrial growth accelerates, investor sentiment will shift. The company's renewed focus on customer needs and operational discipline is already making a difference. The narrative will change from a struggling gaming company to a diversified platform for the real-time 3D economy. This shift could unlock a new wave of investor interest and drive the stock higher. When that narrative shifts, the stock price will follow. History shows that when companies successfully pivot and expand, the market eventually catches up. Patience is key. This isn't a get-rich-quick play. It's about understanding the long-term vision and being willing to ride out the bumps along the way. Real-time 3D adoption by heavy industry is a matter of when, not if, and Unity is perfectly positioned. As digital transformation accelerates, Unity's addressable market will only grow. The path to 2026 is about executing on industrial expansion, stabilizing gaming and rebuilding trust. If Unity can deliver on these fronts, the rewards for investors could be substantial. The current stock price offers a margin of safety. You're buying a market leader at a discount. For those with a long-term mindset, this could be a rare opportunity. Unity's market cap is $15.33. Its TTM EPS is $1.06, and because earnings are negative, the PE is not meaningful. Recent prints show the reset is gaining some operating discipline. In Q2 2025, Unity reported $441 in revenue, $90 in adjusted EBITDA, 21% margin, and 0.18 in adjusted EPS, while keeping free cash flow positive, evidence that the core engine and ad stack can scale even as the company completes its restructuring and pricing pivot. For investors, the appeal is an asset platform that underpins thousands of games and emerging enterprise 3D use cases. If execution stays tight and high-margin services regain momentum, the path back to profitable growth could re-rate the equity from distressed rebuild to durable platform. For investors willing to hold through volatility, Unity is a compelling opportunity to invest in the future of digital worlds. The company's reach and influence are only set to expand. It's both a turnaround and a growth story. Few companies have the potential to reinvent themselves while also leading a technological revolution. Unity's success will depend on its ability to expand beyond gaming and deliver consistent results in new markets. The company's future will be shaped by its ability to innovate and adapt. If they can do that, the upside is significant. The addressable market for real-time 3D is massive and still in its early stages. The company's technology is already essential to creators and industries worldwide. From indie developers to Fortune 500 companies, Unity is powering the next generation of digital experiences. As more sectors adopt real-time 3D, Unity's influence and revenue will only grow. The company is at the forefront of a technological shift that's just getting started. The next few years are critical, but the foundation is strong. Unity's technology, brand, and developer ecosystem give it a durable competitive advantage. Unity's leadership is focused on long-term growth, not just short-term fixes. They're investing in R&D, building partnerships, and expanding into new verticals. Investors who recognize this shift early could see substantial returns. The market often underestimates the power of a platform that becomes indispensable to its users. The digital transformation of industry is accelerating, and Unity is at the forefront. The company is enabling businesses to reimagine what's possible in a digital-first world. Don't let short-term noise distract from the long-term opportunity. The real story is about where Unity will be in 5 or 10 years, not just the next quarter. Unity is building the infrastructure for the next wave of digital innovation. Its platform is becoming the standard for real-time 3D content creation and deployment. The market may be skeptical now, but that creates opportunity for those who see the bigger picture. Sometimes the best investments are made when others are looking the other way. Keep an eye on Unity as it executes its vision for the future. The company's journey is far from over, and the next chapter could be its most exciting yet. The story is just beginning. We're still in the early innings of what Unity can become as a technology leader. If you're looking for a high-potential tech play, Unity deserves a spot on your watch list. The company's blend of resilience, innovation, and market opportunity is hard to ignore. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now, let's talk about our second tech titan, Advanced Micro Devices, better known as AMD, ticker symbol AMD. This is a company that's been through it all: fierce competition, near bankruptcy, and now, a remarkable resurgence that's put it at the center of the semiconductor world. For decades, AMD was the scrappy underdog, always a step behind Intel in CPUs and trailing Nvidia in the graphics card race. They were often seen as the budget-friendly alternative, but rarely the first choice for performance enthusiasts or big enterprise customers. But everything changed under the leadership of CEO Dr. Lisa Su. Since taking the helm in 2014, Dr. Su has orchestrated one of the most impressive turnarounds in tech history, transforming AMD from a struggling player into a true industry powerhouse. The secret: relentless focus on engineering and innovation. AMD's Zen CPU architecture and RDNA GPU designs have set new standards for performance and efficiency, allowing the company to leapfrog competitors and win over both consumers and industry insiders. Today, AMD is no longer just the value option. In many benchmarks and real-world scenarios, they're the outright performance leader, especially in multi-core workloads and gaming. Let's start with the world of PCs and gaming, where AMD's impact has been nothing short of revolutionary. The introduction of Ryzen processors forced Intel to innovate faster than ever before. For the first time in over a decade, Intel found itself playing catch-up as AMD delivered more cores, better efficiency, and aggressive pricing. This strategy has paid off handsomely. AMD's share of the desktop and laptop CPU market has surged, and their stock price has reflected this newfound momentum. The company's ability to deliver high performance at competitive prices has won over gamers, creators, and professionals alike. On the graphics side, AMD's Radeon GPUs are now serious contenders, especially in the mid and high-end segments. They're not just competing on price, they're delivering real performance that challenges Nvidia's dominance. And, let's not forget gaming consoles. AMD is the exclusive chip provider for both Sony's PlayStation 5 and Microsoft's Xbox Series X and S. This partnership provides a massive, stable revenue stream and cements AMD's role at the heart of the gaming ecosystem. But the real engine of AMD's growth is the data center, a market that's exploding as the world moves to the cloud and AI. Cloud giants like Amazon, Google, and Microsoft are hungry for powerful, energy-efficient processors to run their massive server farms. Every millisecond of performance and every watt of power saved translates to real dollars. AMD's EPYC server chips have steadily chipped away at Intel's once-dominant Xeon line. With more cores, better performance per watt, and lower total cost of ownership, EPYC is now the go-to choice for many data center operators. These advantages are critical for hyperscale data centers, where even small efficiency gains can mean millions in savings over time. AMD's focus on performance and efficiency is paying off in a big way. For operators, the math is simple. Better chips mean lower costs and higher profits. That's why AMD's server market share keeps climbing. AMD's technological lead is becoming more pronounced, and the numbers don't lie. Their market share gains are a testament to their engineering prowess and strategic execution. Now let's talk about artificial intelligence, the most transformative tech shift of our generation. AI is reshaping industries, and the demand for AI hardware is skyrocketing. Nvidia is the clear leader in AI chips, but the market is so vast that there's plenty of room for a strong number two. AMD is positioning itself to be that challenger. AMD is rolling out its Instinct line of data center GPUs, like the MI300X, designed specifically for AI and high-performance computing. These chips are already making waves in the industry. While Nvidia's CUDA software ecosystem is deeply entrenched, AMD is making significant progress with its open-source ROCm platform, which is gaining traction among developers and researchers who want more flexibility. Major cloud providers like Microsoft are already adopting AMD's AI chips, eager for alternatives to Nvidia's supply-constrained and often expensive solutions. This is a huge validation of AMD's technology. Looking ahead to 2026 and beyond, AMD's future looks more compelling than ever. The company is well positioned to ride multiple waves of growth, from gaming and PCs to data centers and AI. They're gaining share in the PC market, have locked in stable console revenue, and are rapidly expanding their footprint in data center CPUs and AI accelerators. The AI accelerator market is a massive opportunity. Even capturing just 20–30% of this market could translate into tens of billions in new revenue for AMD. The total addressable market for data center AI chips is projected to reach hundreds of billions of dollars in the coming years, and AMD is determined to claim a significant slice of that pie. If AMD can execute on its ambitious product roadmap, its current market cap could look like a bargain in just a few years. The upside potential is enormous. This is an execution story at its core. AMD must keep the pressure on Intel and CPUs and carve out a substantial share of the AI market from NVIDIA. The stakes are high, but so are the rewards. Under Dr. Lisa Su's leadership, AMD has consistently delivered on its promises, building trust and credibility with customers, investors, and partners around the world. Investing in AMD is a bet on continued innovation, technical excellence, and flawless execution. It's about believing in a team that's proven it can overcome the odds. The old CPU duopoly is shifting in AMD's favor, and the once unbreakable AI GPU monopoly is finally being challenged. The competitive landscape is changing fast. Of course, the road ahead won't be smooth, competition is fierce, and market swings are inevitable. But the long-term trend is clearly in AMD's favor, as more customers and industries turn to their solutions. AMD's relentless drive to innovate is reshaping the entire tech landscape, pushing the boundaries of what's possible in computing. Their products are now powering everything from high-end gaming rigs and cloud servers to the next generation of AI-powered robots and applications. As the world's appetite for computing power continues to grow, AMD's role in meeting that demand will only become more critical. The next few years could redefine AMD's place in tech history, as the company continues to break barriers and set new standards. AMD's market cap is $373.963 with EPS of $1.75 and a PE of 94.02 according to macro trends. Beyond the headline multiples, investors have fresh catalysts. AMD unveiled the Instinct MI350 series and ROCm 7.0 software, positioning a more open AI stack for hyperscalers and enterprises, and it authorized a 6B buyback in May 2025, clear signals on confidence and capital returns. With data center GPU shipments set to expand alongside server CPU share gains, the thesis is that a larger earnings base follows the product cadence. If MI350 adoption and ROCm maturity close the gap with incumbents, operating leverage can make today's premium multiple look far more reasonable. If you're searching for a growth story with a proven track record of execution and a clear vision for the future, AMD is a name you can't afford to ignore. The opportunity ahead is massive for those who believe in AMD's vision and their ability to deliver on it. Let's wrap up with some final thoughts. The future is bright, and the next move is yours. So, there you have it. Unity and AMD, two tech powerhouses that are shaping the future of technology in their own distinct ways. Each company is on a unique journey, with bold strategies and ambitious goals that could lead to explosive growth by 2026 and beyond. Unity, for example, is a classic turnaround story, reinventing itself and building the essential tools that will power the next digital frontier, from gaming to virtual reality and beyond. Right now, it's trading at a discount, which could present a rare opportunity for investors who believe in its long-term vision. On the other hand, AMD is all about relentless execution and constant innovation, pushing the boundaries of what's possible in high-performance computing. The company is capturing a massive piece of the AI revolution, powering everything from data centers to next-gen consumer devices. Both stocks require patience and a long-term perspective, as the road ahead may have its ups and downs. But the potential upside for investors is simply too significant to ignore, especially as these industries continue to expand. So, which of these two tech stocks do you think has the most potential for growth and innovation as we move into the next few years and approach 2026? I'd love to hear your investment thesis and your reasoning in the comments below. Let's get a conversation started. If you want more in-depth analysis, exclusive stock tips, and early access to our research, make sure to join the Stocks Galore Patreon. Link is in the description below. And don't forget to like, subscribe, and share your thoughts with the community so you never miss the next big investing update or opportunity. Thanks so much for watching. See you in the next one. Happy investing.